Testing, testing, testing. Hopefully we're back. Hopefully we're back. All right, you hear me? Okay, man. Man, we done missed the dang shorts we was trying to take resetting that stream, but it is what it is, man. It's alright, it's fine. We missed the shorts we was looking for, but it's fine. Mm, 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 mm. But now we know what we got. This can't be level on this hourly. Now our can't be level got brought down. Um, our can't be level got brought down, so that's nice. Make it where we got less of a big stop loss. This huge drop is this huge drop is a little risky because we want to get in these shorts, but like I said, our stop loss all the way up here now. Let me switch this. Give me 1 second, cause it's not synced. Flat, no. I don't know why my stuff not being synced no more. Usually I automatically do it. Give me 1 second, man. Alright. Now it's synced. Let me go back to MNQ. Alright. So what we'll be looking for next, as y'all can see, we got an hourly gap right here. It's kind of like overlapping this daily gap, but we got an hourly gap right here. This orange. Y'all see this orange? This is an hourly gap that I marked all the way back here. See that? So we got this hourly gap. We trying to see if we're gonna close below it or not. That's the biggest thing I'm looking for. On this hourly, are we going to close below that hourly gap? Right now we pushed right back above it. But if we can close below, we possibly can get a break retest and go to the downside. We could get in a B trade just off the breakout. That'd be a B trade, just taking it off the breakout, taking a short. But the A plus trade, we know what is a break and retest. And then this orange line right here, this is the last hourly swing low we had. So that's the next potential target. I'm gonna give it a second. See if it can look like we about to close, but let me go on that lower time frame. Make sure it's still a downtrend. Yep, 1 minute. I'm liking these shorts. We got 2 minutes for the 2 minute for the hourly. I'm gonna get in a light short. I don't know if it's gonna flush straight down there, but we're gonna get in a quick light short. Cause this hourly definitely look like it's closing below this fair value gap here. Next target is these lows down here. We don't have any news. That's the only thing. We don't have any news to help us out to go and flush down. But we definitely can see we taking that B trade for the breakout. Hopefully we don't get the retest right away. If we do get the retest right away, it's fine. The way you will know if we're gonna get the retest, just go to a lower time frame and wait on that market structure shift. If it do market structure shift to the upside, it's trying to do the retest. Okay, so we're gonna sit on the 1 minute. We already in the short. Sit on the 1 minute. As soon as we see some market structure shift, we know it's gonna do a retest. Currently, if it do market structure shift, the retest will be all the way back up here. You see that? It already be retesting if it do the market structure shift. So we pretty much just gonna let it play out and see if it can start building some base down here. If it can't build no base, it's completely fine. All right. I think we're gonna set stop loss right here. So we trying to aim for 267. Stop loss at what's that? Basically 150. Hopefully we don't get that retest right away. We are finna get this green candle look like. Hopefully it can flip back red. That'd be beautiful. But green candle, I'm pretty sure we're gonna get that retest if we get this green candle here. I love if we can close red or at least close back below these green candles. All right, 2, 1. All right, let's see. So we based our trade off that 1 hour, but we using these lower time frames to try to be able to sit behind some trades, sit behind market structure. So I want to see lower low come again if we can get that to keep it going down. Only thing, this will be the next low we'll be sitting behind, but the thing that suck is it's not in the green. We'll be like our stop loss will be like $20. So I want to see another green candle happen down here if we can in the positive, so we can at least be positive on the day. Another way, if you're taking that B trade, like right here, when it took this low, you could say, hey, I'm gonna just go and automatically set my stop loss at the top of this candle high, so it can be a break even trade. So pretty much it's a risk free trade. But me personally, I don't do that. I like to sit behind market structure, so I don't mind taking a loss if I got to. But a lot of people, they do turn their trade to break even. Once it makes that next low. So we up 130. Let's see if we can get all the way to the target though. This might be the one and done trade for today. I'm gonna bring it down because it is pushing pretty hard. I kind of want to wait on this 1 minute candle to close before I bring it down, honestly, because it can come right back up. But we gonna at least walk away with something today. So we gonna set stop loss probably right here at this $40 or so. It say 41, but basically $40. Once this candle closes, then I'm gonna bring it down one more time right here into this fair value gap if we can keep that fair value gap. If this don't push right back up to close that fair value gap, we're gonna set it right here at this 1 minute fair value gap. It's pushing up. Come on, keep the fair value gap for us. Keep the fair value gap. What is that just popped up? Google Gemini. I don't even know what that is, man. It's talking about Google Gemini. All right, we're gonna bring it up to this fair value gap. So we're gonna take $70 off. So if it break that fair value gap, it's fine. It can break the fair value gap and redrop on us. But even if it don't, I mean, if it do, we still taking $70. We ain't even gonna be greedy, even if we get faked out. So we sitting right behind this fair value gap. I would love to see a green candle come and stay below this fair value gap. Don't come above it, and we turn back red. Cause then now I can set my stop loss at the top of the green candle, cause I'm sitting behind market structure shift. Cause that'll be lower low, lower high. And then we sit there and make another lower low. I'm gonna bring my stop loss to that last lower high. Cause our last lower high is all the way up here, and that would be what, negative $20. So y'all see, I'm sitting behind the fair value gap instead of the last lower high, just so we can be in the green. Just so we can be in the green. Like we said, our main target is that 24,410. That's the hourly low, the last hourly low we had. Here I'll show y'all real quick. Hopefully, it don't matter if we get stopped out or not. This is the reason why I targeted it, was because of this. If we look to the left. Dang, come on, load up chart, load up. Don't lag right now. Come on, now I want to lag on. I'm trying to show. Okay, if we look to the left, I know it's kind of hard to see because the chart like scrunched up or whatever. But we look to the left. The last low we had, hold up. The last low we had was right here. You see that? We had low, high, low, high, lower low. And that was the last low we had before we went straight to an uptrend. And if I move to the right, we don't have no other lows lower than that. You see that? So that's the last swing low. That's why I targeted it. All right, let's go to the 1 minute because we up 200. So it's almost at our target. We really don't want to see it bounce back on us. We want to take majority as we can because that's kind of how I like to do it. Once it's so close to my target, I'm just trailing super tight. Come on, come on, come on. I'm probably gonna just take this 150. I really don't even want to see this pullback here. It look like it's gonna try to do the pullback. I kind of wish it went straight to target. All right, we took 160 right there. We took that 160. We're gonna see if it can come and respect one of these fair value gaps here. Or we might get in one more short. We took the 160. Let's see if it can respect one of these fair value gaps. And then we'll take one more short. And so it can come clean up the job. But if it breaks both these fair value gaps and builds structure above, we gotta leave it alone. All right, it broke this first one. Is it gonna break the second one? It broke the second one, so it might be trying to come all the way back up now, especially if it can close above. If it don't close above, then it's probably consolidating for a second. But if it closes above this last fair value gap we got right here, it's gonna do that retest of this hourly. If it closes, do the break and retest of this 1 minute, it's gonna come and retest that hourly gap. And we could take the longs up there, but I really don't want to. Just because that hourly counter was red. I want to follow whatever the color that hourly counter was. So the hourly counter was red. I really don't want to take the longs just because that hourly counter was red. I want to wait on the hourly green for me to start going long. All right, look like, but I still, like I said, I do think we probably gonna come up here and retest this high. I mean this hourly gap, especially if it can do the break and retest, or if it just break and go straight up to it without no red candles. So it might just go straight to it. It might not even give us any red candles. It might just go straight up to it. And we could, like I said, we could have took them longs, but we really just don't. We don't like. I don't want to teach y'all that. Hey, jumping in shorts and jumping in long. I want y'all to stay with y'all bias. So since we said we was looking for shorts for once the hourly counter broke below here, I want you to keep your bias until that hourly candles switch the candle. I mean switch colors. So like if this next hourly candle flip green, then okay, we can look for the buys, you know. So if this candle close green, we can look for the buys. But I don't want to teach y'all. Yes, I know how to trade that, but I don't want to teach y'all that. You get what I'm saying? I don't want to teach y'all them habits of, oh, it's red, we made a lower low, we supposed to be in shorts, and then you see a long and you just jump in the long. I want you to stay with your overall bias because yes, it can be them longs, but it can be just for a moment. Them longs can be just for a quick little second, and then it hurry up and flush right back down on you. So, but me personally, if I wasn't streaming, I probably would have took this long because, like I said, I'm pretty sure it's gonna come touch this orange line. This that retest because it broke these two fair value gaps. So I'm pretty sure it's gonna come retest that. Um, Even if it don't retest the right way, it can flip red, and then if this retest here happens, we turns red, retest this hourly gap, and then turn green, then the long will be nice to go up there. All right. Only way I would like for y'all to get in the longs is if, like we said, we had a market structure shift. So we broke these fair value gaps. We make a low, then we make a higher high. So then that'll be a high, low, higher high, and that'll be market structure shift. Then it's fine to get in your long. But honestly, I don't like y'all taking trades without no market structure in general. Like right here, we just made higher high. We don't got no true structure. We just made a higher high. That's it. Not until we make a higher low and a higher high again. Now we got structure for the uptrend. That's how I like y'all to trade, you know, and that's how I like to trade too. Like how y'all just seen me. I got in them shorts. When I got in them shorts, what did I tell y'all? I said on that hourly, our stop loss or our can't be level came down because what we had high, basically we had high over here, low, high, then we made that lower low, we made another high, and once this counter broke these lows, it made a lower low, and our stop loss got brought down to these highs right here. And I traded based off of the structure. Okay, well now I know the most my stop loss should be is right here. You know, I waited on that hourly counter to close below that fair value gap. Once it closed below that fair value, I was like, okay, well, I know Market's still gonna be trying to come down. More likely, it's gonna come try to test this, unless it do a retest and fail the retest. Um, so that's why I took them shorts. And when I got in them shorts, what did I do? I dropped down to that 1 minute, and I follow market structure. That's why I tell y'all, I want y'all to follow market structure. I follow market structure. So like now, we probably gonna get a retest. So we didn't touch the top of there. It's probably gonna come retest this 1 minute gap. And if this retest can hold and flip green after, then them loans look good because now there's market structure shift. But what I did, I got in them shorts and I followed behind these lower highs. You see that? These lower highs. And then until I got to this fair value gap, then I used the fair value gap. But man, I swear, that's why I said when I'm on stream, I'm trying not to be a bad example because I don't want y'all to try to do it. But I literally just called 3 perfect trades out. I called them shorts. We caught them shorts. Then when I just seen it break these 2 gaps, I said you can take the loans. Took them loans, you would have ate. Then when I seen this first red, I was like, hey, you could take shorts. And look at these shorts coming right back through. Now, if it breaks this low here, the shorts look good because it's probably finna come and get that, finish up that job. We got 12 seconds. I might jump in a short here. 12 seconds. This is a B trade because we did make a higher high, so it could come right back up and make it could come back up and make a higher low. So I actually, you know what, I'm gonna wait because if it breaks this gap again, it's gonna make a higher low. So I kind of want to see, can we close below this previous candle low? We close below that previous candle low, I might grab a short. I'm gonna wait right now because, like I said, it just made a higher high. It could be setting up to make a higher low, and it can trick us. It can trick us because we can be thinking it's gonna come down here. I want to see if it closed below this previous candle low. It closed below that previous candle low. I think I like it to come down, finish up the job. We wick below it. Let's see if we can close below. See, come on. 10, 9, 8, 7, 6. And we're gonna get in these shorts. Just a quick, it's gonna be a quick scalp short. It closed below it. Let's see if it's gonna make a retest. I don't think it should retest. Push, push, push. Ah, nah, it retest. We ain't gonna touch it. We ain't gonna touch it. It didn't go low enough. We ain't gonna touch it. So now we know it need to close below this low. Like I said, that's the thing. It come with experience. Cause the reason why I didn't just straight trust them shorts was because we just made a higher high, and that broke the downtrend structure. Making that higher high broke the downtrend structure. Yes, I seen these reds breaking through these fair value gaps, but I needed some type of confirmation that hey, we finna come make a lower low. And that's why I waited on that next candle to see if it was gonna come back and retest. And soon I seen it touch this white, I was like, nah, it shouldn't have came and retest if it was trying to drop. Especially after closing below this red candle, that's supposed to be a continuation. So why is it even retesting? So that's why I left it alone. We pretty much in some consolidation right now. That's pretty much what we in. Like I said, we took that 160 on that first trade. That might be the main and only trade. But I'm gonna sit on these charts though, cause I ain't got nothing else to do, honestly. Not right now, at least not until around 10 o'clock, 10:30. But it look like we finna be chopping. We finna be consolidating for a second. Either consolidation or we come retest this and break out to the upside. But biggest thing I want y'all to remember when y'all trade and what I'm looking for, like I said, we traded based off this hourly, and I like that because look, us trading based off the hourly, we took one trade and made 160. Like that's beautiful. We really could have made way more, but since we was in a consolidating market, like we said, we was looking for them shorts up here. This is where I was looking for them shorts. I was just wanted to close red, and then I was gonna take the shorts all the way down. But by the time this hourly counter closed, we was down here. So we kind of kind of missed most of our trade. You know what I'm saying? We would have made like, oh, that's what's up. That's what's up, man. We would have made if we was able to get in them shorts up here when it broke this low or broke the even if it broke these lows, we would have made like $400 or $500 a day. hmm Okay, you on the 15? Let me look at the 15. See what Mel said. He thinking about the longs. We do got our first green counter for the 15. That is good. I say that it do got its first green, so that's potentially showing, hey, we might be trying to go up. But only thing that I gotta say, Mel, is what do we do over here? We just made lower low, right? This could be potentially the lower high if this next candle close red. So me personally, I wouldn't get in them loans right now. I would, like I said, biggest thing I'm looking for is market structure shift. Well, if we even in the downtrend, I gotta stay with the downtrends until I see market structure shift. I gotta stay with them shorts. So that's my biggest thing. I'm looking for a market structure shift. Now, if this green candle came after taking some lows, so like right here, when we had these lows here, say if we would have swept the lows but didn't close below and it turned green like this, then that would be potential reversal. But it's just turning green, not sweeping no lows or nothing. So this probably just a lower high. And we finna come on and finish this job up down here. You know, I probably missed my dang trade. Yeah, I think I probably missed my trade just then. Let me see. Let's go to the 1 minute. We made a lower low. We should be coming straight down. Let me see. It should be coming down. I'm gonna get in one short. I think we finna clean these up. If we close green here, I'm gonna jump out quick though. I'm gonna jump out pretty quick. Cause I think we should be just pushing down. If we close green here, I'm gonna get out fast though. And once we sweep this low, I'm bringing stop loss to profit. Soon we sweep that low, or if we close green. Or if we fail to close below this previous counter low, I cut it too. Alright, look like cut. Look like cut. Yeah, we failed to close. Cut. We only lost $1. I was trying to see it close below this. It kind of did it. We only lost $1. That was good. That was a good close. I was looking for it to close below this previous counter low. That's a continuation. Next target would have been these lows. And like I said, once it swept these lows, I would have brought my stop loss into profit. Cause hey, I want to see it close past these lows to go and finish this up. But it didn't do neither. When I seen it didn't close below that previous candle low on the 1 minute, I said, nah, let me cut it. Like I said, we only lost $1.50 right there. So that ain't nothing at all. It basically was a free trade. All right, let's see. Can we start building some more structure? All right, we got lower low. This potentially could be the lower high. It didn't push past that 1 minute gap. It did go to the other side, look like. Let me see. Oh no, it didn't get all the way over there. Okay. So if we can get a red candle here, that'd be nice. If we can get a red, if you want to be short. If you want to be long, you just wanted to come to the other side. You just wanted to come to the other side. But if we want to be short, we need a red candle here. That's what I'm saying. We in this. That's why I'm saying. Look at this consolidation, man. We chopping right now, so it can fake a lot of people out. You just got to be able to see. Okay, that ain't a continuation pattern. That ain't, this a reversal pattern. Like how I just seen that right here. It was looking good from the shorts. We was up like $20. I could have just took my money, but I'm looking for this low to get swept. Soon I seen it came back to a doji, basically where we had got in it. I just closed it because I'm like, hey, it's supposed to close below this previous counter low for that continuation. And it didn't do that. I just got out, you know. So we chopping. We chopping. We chopping. And see, Mel, your loans might be coming up, especially if we can't push below them lows. If this close green here, you might be looking at them loans. The main thing I look for the loans if I'm you, Mel, they gotta close past this previous candle. If I'm on the 15, if it closed past its previous 15 high, then I like the longs for sure. Um, if it even if it just closed green, I like the longs up to this high. But if it come up to this high, you gotta see it close past that high, and then you can get in them longs. All right, Mel. I don't know if you still in here. If you on that 15 minute to look for longs, either this gotta close green and don't touch that high yet, and you can take it up to that high. Or if it touched that high, it just gotta close past that high. Once it closed past that high, then I like the longs. All right. If you want to take longs, so it look like it's about to touch that high on the 15. Once it touched that high, wait. Okay, it touched the high. 15-minute counter, you need to either see it close past this high, or if it even if it come up to here, then now your stop loss will be down here. But biggest thing you want to see, can it close past this high? If you trying to get off the 15, if you feel like, hey, this might push up too far up, it might push up too high by the time I can get in, because we still got 8 minutes before the 15-minute. If you feel like, hey, I want to kind of get in now, this is how you get in it. You go down to a lower time frame. You mark out the target that you wanted to close above. This is how you do it, man. I'm teaching you one-on-one right here. If you know and it got to close past this previous 15-minute high, right? Mark that out. Put a line there. So I'm going to put a white line. This is how you going to do it if you want to get in early before the 15-minute close. Mark that out. Go down to either the 5 or the 1 minute. So I'm going to go to the 5 first. 5 minute, you want to see structure forming above it, above that white line that you had. So if this that 15-minute high, I want to see structure forming above. So that means I want to see a green candle, red candle, green candle that's in the uptrend above my white line. And once you see that, just take your long and sit behind them higher lows. Even if you want to get in it below it before it even get up to it, you make sure it's somewhere reasonable for your stop loss. So like right here, I'm on the 1 minute now, Mel. The last higher low we got, or last low we got, is all the way down here. So it don't make sense. Yes, I can jump in, but literally one red candle can bring it all the way back down here. Versus wait on a red candle to happen somewhere up here. Once that red candle happen up here, wait on it to make a higher high. Then boom, get into the long, and now your stop loss can be all the way up here instead of all the way down here. So right now, don't touch it. This is like risky. I mean, you could jump in and just hope for the best that it goes straight to the next target, but it's super risky because your stop loss all the way down here. Your true stop loss all the way down here. Also, or you can do like how I did when I was in them shorts. You could sit behind the fair value gap. So say if you get in the long here, so you can get in the long here, your stop loss would be the bottom of this fair value gap right here. You see that? So it's all up to you. It's all depend on how, if you want to jump in now or not. Me personally, like I said, I like to sit behind structure. If I can sit behind market structure, I'm gonna sit behind it before a fair value gap. So if I got a higher low somewhere, I'm gonna sit behind it before I sit behind a fair value gap. Just because I can have a fair value gap, but without no structure, it can literally just come straight down and clear the fair value gap because we don't got no can't be levels nowhere. The last can't be level, like I said, all the way down here. So okay, we getting our first red. This is how you would do it, Mel. You getting your first red, right? We got 30 seconds. We gotta see if it's gonna close red. Look like it is. You getting your first red. Now, the main thing you're gonna be waiting on is boom, when we make our next higher high, whatever that lowest point after we made a red candle, that's gonna be my new stop loss. But so we're gonna wait. You getting your first red, so it's gonna just basically telling us, hey, what's the lowest point we want to go to right now? It's telling us market looking for a low. Market looking for a low. So we're gonna see how far down the market want to go before it make another high. So pretty much the main thing you looking for, Mel, is the first green candle to come back. You can either get in off the first green candle and set your stop loss at that lowest point, or you can wait until a higher high comes to solidify that level and then get in. It all depends on you. The A plus trade is wait on the higher high, but if you wait on that higher high, you're gonna miss out on a little bit of money, but you're gonna be a little bit more sure that hey, it ain't supposed to go below that level. So it's pros and cons. If you wait on the higher high, you're gonna have a more secure trade, but you're gonna miss out a little bit of the trades you could have got, probably miss out 20% extra, you know, versus you get in off the first green. So like right here, it just turned green. You can get in that long, set your stop loss here, but the thing is, it's not solidified. You can always come back and break it. So that's the risk. You know what I'm saying? That's the risk. But if it go take that high, then now I'm solidified. I'm good. So like I said, you can get in right off the first green. It's just a little bit more riskier. That's all. So if you wanted to get in your loan, this is where like I said, you can get in either off this green or you can get in once you take the high. Since you're looking for them loans. Me personally, I'm not looking for my loans until I see an hourly loan, hourly green counter, because I'm trying to trade off my hourly. But it's completely fine. It's nothing wrong with trading off the 15, especially when we're in consolidation. When we in this sideways market, I'm gonna be honest, the best thing to do is trade on the lower time frame. But I'm not trying to teach y'all that. You know what I'm saying? I'm not trying to make y'all have them habits. Cause it can be a little bit more stressful trading that way. Cause you got to get in and out pretty quick. You in and out your trade real fast. Versus if you trade off that hourly, you can let it run. Like y'all seen when I was in them shorts, I switched time frames. We went back and looked where the hourly levels was at, and we just letting the trade run in the background. So it's a lot easier. He said, so I can enter and exit as many positions as I want. Yeah, you can. So you can enter and exit as many times you want. It ain't no limit. Um, Only thing when you got top step, it is a limit on. Like I think you only can buy 10 micros. So the one MNQs you only can buy 10 at a time. If you do regular NQ, you only can buy 5 at a time. This if you got a 50K account. Of course, your max loss is 2,000. So when you say negative 2,000, your account gone. You gotta rebuy another one. Profit target 3,000. But other than that, like I said, you can keep getting in and out of trades all day. But as if you want to. That's the thing where I say I'm trying to kind of show y'all how to trade where just you might take 1 or 2 trades out the day, but you make $400 to $500. That's why me personally I like them higher time frame trades because you can make a lot. It's just you gotta be patient and wait on the setup. That's the thing. But with scalping, you can make more than somebody that do the hourly if you can be right 100% of the time. That's the thing with trading on the lower time frames. You got to be right a whole bunch. Like you got to be right 10, 15 times in a row. To really make as much as the person that's just trading off the higher time frame, and they be right 1 or 2 times. And that's the thing. That's why I'm saying, me personally, I'm trying to teach y'all how to. Well, I ain't gonna say teach. I'm just trying to show y'all by example. Uh, how to make the trading a little easier for you. And that's just trade on the higher time frame. That's the easier way. Yes, it's slower pace, but you gonna more than likely you gonna make more money trading on that higher time frame than you would taking a whole bunch of 1 minute trades and stuff like that. Cause you taking all them trades, if you sitting there taking 20 trades, you putting yourself at risk of more chances of losing. Yes, you can be like, oh, I just won 5 or 6 trades in a row, but they all $30 each or $50 each. One bad trade, losing $200 or $100 gonna wipe away all of those, and you gotta pretty much keep trading back to back to back. And as time go on, as the market getting closer to closing, the worst trades might get. It might not be as much room. They probably already hit all the targets it was supposed to do. So now you just gambling versus If you trade on the hourly time frame or the 15-minute, using those as your base, um, you probably gonna if you on the hourly, you probably gonna get 2 or 3 trades out today. Trading on that 15, you might get 6, 7 trades out today, which is good. That's what I like because okay, well now I'm letting my trade play out a little bit more. I'm not jumping in all the time, getting faked out, and it's less stress on my mental. Less stress on my mental, and when I do win, it's not a $30 win here, $40 win here. It's a $150 win or a $200 win, you know, and I only had to take 1, 2 trades at a time. So it just make it simpler and easier. It's just y'all, like I said, y'all see the pros and cons to it. Like today on that hourly, we wanted to get in up here. This is why I was looking for the short. I wanted to get in the shorts up here, but me having to stick and wait until this hourly candle close, I wasn't able to get in till all the way down here. So that's the con of it. When you in that consolidation market, most of your trade gonna already play out on them hourly. Yes, you'll be more certain that it's gonna go your direction, but look, this is like $300 extra I could have made, if I would have just got in a little earlier. But this gave me my confirmation to make me comfortable. This made me comfortable to get in them shorts when I seen it close below this hourly gap. So you do whatever best comfortable for you and make it easier for you. So I got in them shorts, took them shorts. I didn't get quite all the way to my target, but I got most closely to my target. We seen it up $200. Uh, but yeah, that's the thing. Now that's this is when you get more advanced at trading. You gonna learn how to be able to base it off the hourly, right? You're gonna be able to know how to base it off your hourly, but you gonna know how to get in on the lower time frame. And that's when you get even more advanced. Like you're gonna be able to, okay, on this hourly, if I need this to be red, main thing I really need is a lower low to come. Boom. Soon as it hit this lower low, so I'm gonna mark that out for y'all real quick. I'm gonna put a yellow line. Soon it made that lower low right there, instantly in your head, you can be like, okay, now I only got 10 minutes left for the hourly from the close. Really, I just need my 5 minutes to stay in a downtrend. So soon it had touched that, soon we broke this yellow line, and say you got 10 minutes left for the hour close. Okay, I just need my 5 minutes to stay in a downtrend for these next 2 candles. Boom, first one red. Okay, that's giving me confidence that hey, we still gonna be going down. And then when I see this candle about to close red, we got like a minute left or something. Then boom, I'm knowing this 5 minutes gonna close red. So now it's gonna confirm we made a lower low on the hourly. My 5 minutes still in the downtrend. I can go ahead and get in right now instead of waiting till the hourly close all the way down here. You know. So that's when you get more advanced, you're gonna be able to still base your trade off that higher time frame, but you're gonna know how the lower time frame is supposed to set up for your trade. You get what I'm saying? Cause like say if this hourly was red, but then I go down to the 1 minute and we starting to make an uptrend. Okay, yeah, this hourly red, but it can literally reverse because we making an uptrend on the 1 minute. You know, so but just to keep it plain and simple, if you trade on that dang hourly, you can hold your trades a little longer. Like me, I slick could have still been in my trade, but I didn't want my stop loss to be all the way up here just to get this little bit of profit. That's why I trailed it down and I just get back in. But our true stop loss was all the way up here. So technically we still could be in this trade. But I ain't want to do all that. I just was trailing. I just took that quick breakout because we said what? We was taking a B trade. We was taking a breakout without even a retest. So that's why I just trailed real quick because we just took the breakout. Right now, it look like we might be able to get one more trade in. It look like it's trying to set up to keep finishing Like we're trying to set it up to come clear this up. Oh man, never mind. I do want to get in those shorts right now because I can see it coming down here. But look, for us to confirm us to be in a downtrend, it gotta come take this low, right? Well, by the time it take this low, look how close it's gonna be to the target. So that made me don't even want to get in the trade, honestly. Let me look at the one. Unless we get in on the 1 minute. Let's see. 1 minute. Do we got some lower highs? We do. I want to see a lower high underneath this. If we can, without just flushing straight down. If we just flush straight down, it will. So I want to see a lower high underneath this consolidation right here. So basically, I want to see lower high underneath this range. If we don't get no lower high underneath this range and we just go straight down to target, then oh well. All right. It is what it is. But I want to see a lower high underneath there. Really, it can be, I think, underneath up here. It don't even got to be that far down. I think it can be right here. So we need to see a lower high. If it just be straight red candles and they go straight down and take this low out, oh well. We just missed the trade. It just never gave us a true entry. Because if it don't do it on the 1 minute, and you don't get them market structure on the 1 minute, it just didn't give you no opportunity. Because that's the lowest. I mean, you could go to 30 seconds and stuff, but ain't nobody trading off no 30-second time frame. So if the 1 minute don't give you no entry, you definitely don't need to be in the trade, honestly. If the 1 minute can't give you an entry, because the 1 minute, the smallest time frame, you should be able to see all kind of structure. But you basically, that's the whole gist of what we're doing. We're using a higher time frame to find out the direction we want to trade, and we finding out our targets, and it can't be low. We draw down to the lower time frame, the 5 or the 1 minute, to get our entry. And all we do is, if I'm looking on that 1 hour and it's in shorts, and I'm looking to go short, I'm just looking for the 1 minute or the 5 minutes to be short, you know? And when the 5 minute or 1 minute is short, I'm going to just sit behind solidified levels or can't be levels, whatever you want to call it. And that's how you do it. That's literally all you're doing. Look at that higher time frame. See what color the candle is. If it's red or green, is it red? I should be looking for the shorts more than likely, unless we sitting on like a gap or something like that for the bounce. If we ain't sitting on no gap and we close straight through a gap or anything, I should be looking for the shorts. Okay, I'm looking for the shorts. I should be able to identify the next target, and I should be able to identify my can't be low. Once I got all that, okay, I don't need nothing else on this higher time frame. All I gotta do is go to the lower time frame and wait on it to be in a downtrend. Once it's in a downtrend, find me a good entry. You know, I want to get in off of a red candle, since that's the direction I want to go. Get in off my red candle, set my stop loss behind a higher low. So more likely that's gonna be a green candle or whatever the high after a green candle. And then I'm just gonna let it run, go that direction I want, you know, until it finally breaks, until we see a higher high come, or until we see, yeah, basically until we see a higher high come. I'm just gonna let it run until we see a higher high come, or we hit my target on that lower time frame. Now, if you just strictly trading straight off the hourly and not even going down to no lower time frame, your stop loss gonna be way bigger, but you're gonna be able to hold your trade a lot longer, you know, and let it play all the way out. You just gonna have to be real, real patient, because just like how we got in them shorts up here, right? We seen it get real close to our target. Our target was like 260, and it got to like 220. But then look what happened. Consolidated, came right back on us. So that's the thing. If you just only trade off the hourly, you can get real close to your target and then come right back up. You just gotta wait it out, and then eventually it might come on and clear your target up. So right here, we might be able to get a short right here if we can close below this low. Only thing, I just hate getting in a short when it's that close to the target, man. It's just so close to the target. It's like, shoot, I'm getting a short to make what, $30? That's the only thing I don't like. If I get in this short here, I'm only trying to make like basically $30. I mean, it could keep flushing past, of course, but I'm counting what I already know gonna happen. So if I already know it gotta touch that when it comes back to a downtrend, I'm only saying, hey, I'm only potentially gonna make $30. That's how I'm looking at it. But like I said, if it goes below this low though, I definitely could see the shorts. Or even if it just wick below it, I could see the shorts possibly coming. But it gotta come below here because that'll make a lower low. That will make a lower low. And that'll give us our structure underneath this consolidation range, which we was looking for. Mail up. Mail up. What that say, 78 or 73? I can't even see good on this dang computer. Let's go, Mail. Yeah, my boy Mail getting to it. He look at the consolidation. How it gonna make a higher high? That's what I'm saying, man. You getting chopped up around that much. That's why I say trading on this thing 1 minute and 5 minute, bruh, y'all gonna make it way more stressful to trade. I'm gonna be honest. Stick to them 15 or 1 hour to make it way more simpler. You trade on in 1 minute, man. You sit here and you like, okay, I'm gonna get into some loans, and you just holding your loans. But that must come right back down. You get out. Then you try to get in the shorts. Then it flip all the way back up. You know what I'm saying? It's choppy like crazy, man. But that is also because even on the higher time frame we consolidating, so that's why it's super choppy like this. But normally the 1 minute is choppy anyways. But it don't help that the higher time frame choppy too. So it's like, I ain't gone. We getting double the chop for real. Um, But nah, you stick to them higher time frames, you can clean all that up. Like I said, we was sitting on this higher time frame and we was just taking shorts. Boom, lower high. Soon as made that lower low, you get in the short. Stop loss up here. You still in this trade. You just chilling. Yes, you had to wait a whole bunch of hours. It was at 1, 2, 3, 4. You wait like 12 hours for that money to keep dropping. But um, well, actually, because you would have got in off this red here. So you've been waiting 1, 2, 3, 4 hours. So you've been in straight 4 hours for it to hit your target because your true target was right here. So you would have waited about 3 hours and a half. So you've been in straight 3 hours and a half to get to your first target. But then it closed past your target. So now, hey, it's pretty much extra money because it closed past your previous target right here, which was that last low. So you pretty much getting extra money now. You just sitting here, boom. I'm just sitting here waiting on it to either hit this hourly target or the first green hourly counter, I get out, something like that. So it's a lot more simpler if you're using them higher time frames. Yes, it is. We was in some choppy stuff, but it still followed structure. Even though it was chopping like here, boom, we start consolidating, but it still kept the structure. Boom, we start consolidating, but it still kept structure. We start consolidating, still keeping structure of the downtrend. You know, that do suck though, cause look, that's 1, 2, 3, 4, 5, 6, 7, 8, 9 out. Basically a whole day worth of chopping right there. How many? 1, 2, 3, 4, 5. 5 of the hours whole chop. So pretty much, cause it's 8 hours sessions. So pretty much that whole day chop. Well, with futures we got 23 hours, so it's different. But I'm thinking of it for stocks. That whole day chop. 1, 2, 3, 4, 5. Pretty much 5 hours after 8 hours chop. 1, 2, 3. Yeah, this kind of ranging a little bit. It is chopping, but it's a big chop range. So, but pretty much the past 3 sessions we had, it been chopping 5 hours plus. So if you was doing options this week or the past 3 days, I know y'all mad in the mud, boy. Cause options, boy, y'all been getting killed. Y'all only 8 hours open, and 5 of them 8 hours they ain't been chopping. So I know options extra mad, but futures, y'all like we said, we got 23 hours out today. But we can get in at nighttime. We can get in during the day. It don't matter. We'll go to that 1 minute. See if we get some structure back. All right, we got lower low. Okay. Come on, man. We need to keep dropping. Come on. Cause I know it want to clean this up. It's just playing games, man. I think this might be it right here, y'all. This might be that short. If this close red, this might be leading us to that short for close red. 7, 6, 5, 4, 3, 2. I think this that short. But like I said, I don't like the short just because it's so close to my dang target. But I think this might be it. We gotta close below this low. That's the thing. Yeah, dang. See, look. Soon you think it's about to be it. Come on. It gotta close below this low right here. Because if we made a lower low, we need to close below this low for the continuation. Actually, I want to see close below this low for that continuation, honestly. But see, shorts. It's just too risky, man. Ain't no sense of putting your money at risk. It said, let me see what mail. My bad, man. I ain't just now seen you text. It said, that's what I was gonna ask. How can I trade after I get off work at 5? Ain't the market closed? Nah, futures 23 hours market. Futures market closed at I think 4:30. Open right back up at 5:30. So it's just your volatility. You see how we've been moving a lot. Like I'm on the 1 minute and we've been moving a whole bunch. I go to that hourly. We got that big old candle drop to the downside. You see that? You ain't gonna really see that. Once that 5:30 hit, it might move the first hour. It might move, but then after that, it's gonna probably be moving sideways. I mean, not completely sideways, but it's gonna not move as much as when the market be open. You know, when the market will be open, you get these big old ranges and stuff. When it's at that 5 o'clock, it slow down. I did notice like around 9 o'clock at night, some volatility be coming in. At 12 o'clock at night, volatility coming in, and then around 2. But a lot of time people sleep around that time. Um, but yeah, but it don't matter. It really don't matter if you just if you go to a higher time frame and follow structure. It don't really matter. It's just it's gonna be take a lot longer for your trade to play out. That's all. Because even since these 23-hour markets, even when we looking at this, boom, when it made this downtrend right here, made this lower low, and it switched to a downtrend. Even with the market being open all that time, look at it, it's still staying with the downtrend. You see that? Only thing it do fake out sometimes when it's like the aftermarkets. So like right here, it ended up making a higher high there, but it didn't close past, so technically it still kept our downtrend, but it did make a low and then higher high. So that probably would fake somebody out to go long. But you gotta that's how you gotta know, okay, what's a continuation pattern. But we swept this high. We did make a higher high, but we didn't close past. So technically that's not a continuation pattern to keep going higher. So if you know your rules and structures and stuff, it don't even matter if you try to fake out and stuff. Cause you know, okay, yeah, it closed green, but this ain't no dang continuation pattern. I ain't finna get in off of it. You know. Yeah, it made a higher high, but it didn't close past the previous high. So I'm not trusting it to keep going, you know. Shoot. Really, man, this was the best entry right here though, but we couldn't get in because Top Step. Also, Mel, remember this Top Step. You gotta close your trades. I think I want to say by that 4:30 mark, but I always just close at 3. I don't trust it because if you violate the rule, they're gonna take your account. So close. I personally say close at 3 o'clock, just like the regular market. I think they let you go to 4:30, but I don't. I'm not sure. You gotta look it up on their site because I just always close by 3. But most of the time, I don't even be on the chart that long. Usually, I'll be off the chart about 10 o'clock, and then Leave it alone. Unless I just got in the over trading frenzy and I over traded that day. All right, look, here go them dang shorts coming through, y'all. Look like it's about to come clean this up, possibly. Let's see if it can close below these lows. Probably finna come clean it up. Uh-oh, it look like it's finna close below this low. I just hate getting in for $30 or something. That's the thing. Yeah, 3 p.m. Close all the position by 3 p.m. And then me personally, once I close by 3 p.m., I'm not. If I want to trade overnight, I'm not getting in until after 5:30. Yeah. They said, what if I enter a trade after? Yeah, after the 5:30 or 5 o'clock. I can't remember which one it is. I think it's 5:30. After the 5:30 market open back up, then yeah, you can just get in. It's just say if I get in now, I gotta close by 3. If I get in at that 5 o'clock when it open back up, I gotta close it by 3 that next day. You get what I'm saying, Mel? So whatever day you start, whatever day you basically the trading day ends at 4:30 every single day for futures. So any trade after the 4:30 will go to the next day. You know what I'm saying? Yeah, it'll go to the next day because you won't even be able to press buy or sell when after 4:30 hit. You won't even have the option to press buy and sell till the market reopen. So once it reopen, okay, now I just got to sell it by that 3 o'clock that next day. So you can hold it overnight. Like you can go to sleep, wake up, and still be in your dang trade, and you'll be perfectly fine. And I used to do that when I first had my accounts. I used to hold overnight, but I've been seeing funny stuff happening overnight, bro. I swear. Like it'd take my dang stop loss out. But I think that was probably because I wasn't as experienced of a trader as I am now. So maybe I didn't have certain levels to a T, you know. But I wake up, it just kicked me out of trade and go straight to TP, man. I used to be so dang mad waking up like that. But every blue moon I hit, okay, I go to sleep, wake up taking 1 micro, I'm up $400. But it just all depends on if you trust your strategy and you know you got your levels marked out right, then yeah, you can take them over like trades and stuff. I just personally don't like to do so. Not no more. I feel like I make plenty enough that I need during the day, and it's a lot more quicker pace, so I can get in and out of my trade a lot faster. I ain't got to stress about watching. You know what I'm saying? Because if it's going super slow, yeah, it might look like it's an uptrend or whatever, and we're getting green candles, but it's going so slow it didn't go to my target right away. We bound. We might get a red candle come in, and now it just wipe away my whole uptrend thought. You know, so because you don't never know once that market slow down and we start consolidating, you don't know what direction it's finna go. I'm gonna be honest, man. Like that's why when I had gotten them shorts earlier today and it got that close to TP, I told you I said I'm finna trail my stop tight now because it's so close to my target. Because if we come back and consolidate, now at this point, one, I'm gonna have to hold my trade a lot longer because it's consolidating. And then two, since it's consolidating, I don't know which direction this market gonna break out. You know, it's like a crazy monster in the box or something. I can still believe that it's gonna come down, but we truly don't 100% know where it's gonna break out. You know, because it's consolidating. So it be doing this basically. Ranging, and I don't know if it's gonna break down here or if it's gonna break to the upside, you know. But our thing as a trader, once it breaks out, we supposed to react. Okay, it broke out to the downside. I'm looking for them shorts. Possibly get that retest to go back down some more. Break to the upside. Okay, boom. I could take a B trade to follow that trade to the upside, or I can wait on it to come back retest and keep going. Cause now it's showing me it don't want to go back inside the consolidation. That's all breaking retest is. Breaking retest is pretty much just showing you market don't want to go back in that consolidation. So if we was consolidating, or say this a fair value gap or anything, when you break and retest, all it's doing is just telling us, hey, market not trying to go back inside there. That's why I say these the A plus trades. Because when we got a fair value gap or a consolidation range or a support resistance, whatever you want to call it, they all the same thing, just name it differently. When that market breakout and it retests and that retest fail to go back inside, that's telling us market don't want to go here. So that means it's finna go up to the next level, it's finna go up to the next consolidation area or something, because it's telling us they don't want to go back down there. That's why I say these the A plus trade. When it break and retest, A plus trade, because it pretty much confirmed, man, we ain't trying to go back down in that box. That's basically what it did. It just confirmed it ain't trying to go back in there. Same thing to the downside. It break to the downside. If we get that retest and it don't go back inside, and we end up making another lower low, it's telling us it ain't trying to go there. Okay, yeah. Get used to it, Mel. Like, ain't nothing wrong with it. Get used to using that platform. You got to get yourself comfortable with getting in and out them trades. Still try to overall follow your market structure and stuff. But yeah, it is fine if you get a couple trades in and stuff, because you want to get used to getting in and out and how to put the drawings on there and everything and stuff like that. But yeah, that's good, man. Glad to see it. Glad to see it. And one other thing I would advise to you, Mel, since I know this is your first day on Top Step and stuff, have a set amount that you want to make. I ain't gonna say set amount that you want to make, but kind of set amount you want to make and set amount you want to lose. Um, so like with me, when I first started, I was like, okay, we just need $150 days, $550 days on Top Step to get a payout, right? So my goal was, okay, make $200 on a day, and if I take my first loss after that, I don't want the loss to be more than $40 so I can stay above the 150 gap. I don't want no loss to bring me below 160. Um, or if I just take my first loss after I'm already up 200, I just call it. All right. So have like a certain set rule. Me personally, that's what I advise for you. Try to aim for $200 for the day. Once you hit your 200, the very first loss you take, leave the market alone. Wait till the next day. Or when you lose your first $40, leave the market alone. Wait till the next day. Once you pass that, once you hit the 200. Or say if you're just having a bad day and you don't even get up to $200, have a max loss that you want to stay above. So if I know my max loss is $2,000, I only can go to negative $2,000. Well, I want to guarantee myself to at least get 10 trading days in. I say, okay, well that means I can't lose more than $200 a day if I want to get at least 10 trading days in. So my max loss, shoot, when I get past and I ain't even gonna say the 200, I'm gonna just say boom, the 150. Once I get to a negative 150, I gotta call it. I gotta wait till the next day, because the biggest thing you want to do is be able to get on here every day. Not all days are not the best days to trade. Like today, I told y'all today not the best setup day. Honestly, I told y'all I said I could see us chopping a lot today. If anything, the main thing I look for is a short today. That's what I said last night. I said the main thing I'll be looking for is the shorts. Because the longs, even if we push up real hard for the longs, they still don't look that good. Um, but have that set amount in your head, like, okay, if I get to negative 150, I'm calling it. If I get to $200, the very first loss after I make 200, I'm finna call it, to preserve what I made. Because like I said, the biggest thing is being able to get on here each and every day. Biggest thing is to be able to withstand them bad consolidation days. For now, when we finally break out that consolidation, boy, it's gonna be some easy trading. Boy, we just following market trade. We just following uptrend, or we just following downtrend. Cause we ain't in consolidation no more, so now it's super easy. Now we just set our can't beat levels and just let that mug ride. It's easy money now. But that's the thing. That's what a lot of people mess up here. They get caught on them consolidation days and they blow their whole account. and they probably blew their count on Monday or Tuesday. But Thursday we broke out the consolidation. Now it's super easy trades. You can clearly see. But they don't got a count now because they ain't blew it because they didn't stop themselves with they, you know what I'm saying, with a max loss for the day. Like that Monday they could have told themselves like, hey, I'm gonna stop at negative $200, but they kept trading. They kept going. They hit negative 200 and kept going. Now they down 1,000 on the day. So then they coming in Tuesday thinking they gotta make the money back for Monday. And if they take their very first loss, it can kind of discourage them where they're not trading their same strategy that was successful. So then they end up blowing that account. Like I said, that Wednesday or Thursday come, we break out the consolidation, and it's easy trades now, but they ain't got no account, you know. So don't get too greedy. Don't overtrade. Um, like I said, me personally, that's what I advise. Have a set amount in your head. Like okay, I hit $200 on a day. I'm good with that. You know, find a level number you good with. If it's $100, I make $100. I'm good with that. I make $150. I'm good with that. Look, it cleaned it up for us, y'all. It's all right though. Um, but had that set in your head, man. Like I'm good with this amount. You know what I'm saying? And I'm fine with moving on to the next day. Like today, I came in today. I talked to my wife before the market. I said the market look trash. Honestly, I told her. I said other than some shorts, the market look trash. Um, I told her. I said if I just make 150 to $200 a day, I'm good. I'm good with that. What we just made the very first trade we took, the only trade we took, made 160. We really hit the 200, but I didn't close it at the 200. I just trailed my stop loss. But we made 160. You know, very first trade. All it took was one trade, and I already got in my head what I wanted to make for the day. You know, I'm not over trading. Yeah, like I told you, I said, shoot, I could see them shorts, I could see them loans. I did call out these loans here or over here. I called these loans out, called them shorts out, but I didn't get in it. You know what I'm saying? I was like, okay, that's not an A plus trade. That's not following the structure I wanted. Cause like I said, I was looking for them shorts. But why would I be taking these loans? Stuff like that. You gotta be comfortable with what you got, you know, because just as quick as you make it, you can lose it just as fast, man. And like I told you at the beginning of the stream, the longer you on these charts, the lesser and lesser the quality setup you got. Um, and that's why it's so important to do your market analysis the day before. Cause like yesterday, I had did my market analysis that night before. I'm coming in with a game plan already. I know my targets, I know my levels, I know everything I need to know for when I get in my trade. So that's an A plus trade for me because I already know what I'm looking for. I already know where I'm aiming to get in at. I already know where my max loss is at. That's my A plus trade. All I'm doing is just waiting on it to give me my setup. Now, the longer I be on the chart, okay, say I take my first two trades, they still based off of my A plus setup. But if I keep trading, and say it already hit my target for my A plus setup, or it already hit my stop loss for the A plus setup, every trade I'm taking after that is not an A plus setup because I didn't sit there and analyze it the day before. So I pretty much didn't do my homework on it. I didn't get to marinate and already see like, okay, this is where it's supposed to go and stuff. So it's kind of like I'm on the fly. So now these are kind of basing off your natural skill of trading once you overtrade. You know what I'm saying? And that's putting you at more risk of losing on trade. When it come to trading, we kind of want to trade the certain stuff. This ain't no dang prize picks or my bookie, none of that stuff, bro. FanDuel, we ain't trying to gamble on it, but we trying to trade what we clearly can see. That's what we trying to do. You know what I'm saying? We want to make this stuff almost. I ain't gonna say you can't make 100% guarantee you gonna make that money, but you want to. Okay, I know I'm about 85% right on this mug going this direction. You know, so that's the biggest thing, man. But I'm finna go ahead and call it, y'all. It's 10 o'clock. I'm finna call it for the day. Hopefully, y'all gain some wisdom, gain some knowledge from this stream. This honestly was a real informative stream today. really not that much trading, but it was real informative. So if y'all want, y'all come back to the stream, re-listen to it, pick up on what I was telling, you know, because this definitely was a nice informative stream. Um, you can always go back and listen to the streams and stuff if you want. Um, but yeah, I'm gonna call it a day, man. It's 10 o'clock. We made what we needed today. We took one trade, one and done. Pretty good. Yeah, y'all have a good one. Trade smart and stay safe. All right, boy, Keith is out. Peace.